things series for SAP Business One training. Today we're going to talk about the exchange rates. We're going to talk about how exchange rates in SAP Business Ones are set up, how they work, and how they affect General Ledger. So before we begin, let's talk about some concepts in SAP Business One. When we talk about currencies, we deal with system currency, local currency, and the business partner or all other foreign currencies. In SAP, the system currency is going to be the currency in which the system or the general ledger or company is maintained. Right? In our example today, we're going to be working with OEC Computers. OEC Computers is a U.S. corporation, and our system currency is going to be U.S. dollars. We also have the local currency. The local currency is a currency which in the country you're doing business. Again, in this case, we're going to be using the local currency as U.S. dollars as we are in set up here in Miami in the United States. And then finally, we have the business partner or the foreign currency. This is the currency for which you do business with your business partners. So let's talk about a little bit of concepts in the setup. Let's go into our setup here. And you can see here is what we're talking about. We're going to have, again, in this example, we have our system currency as U.S. dollars, our local currency as U.S. dollars. Our default account currency, in this sense, we set up for all currencies. Right? So this would be the initial setup. Once this is set up, this is maintained within SAP. So in the example today, if we have a business partner who says does business in Germany, we can set the business partner to have his exchange rate for euros. And I'll show you the concepts as we go through them. So let's go into a few things. Let's talk about the actual setting up of the exchange rates and the currencies. In SAP, we can set up any currency we desire. In this case, for the example, we have U.S. dollars, okay, it's denoted by the code of the dollar sign. We have Canadian dollars, again, denoted by the Canadian International Code, and we have euros. So here's where I would do my initial setup of currencies. So we go in there. After that, we would then say set up our exchange rates. So here we can go into the exchange rates, and you can see our currencies that we're working with. Right? This is something that's done on a daily basis, or it could be done several days out. As you notice here, I have all of June set up. I can do that a couple ways. I can set a rate for a criteria range, so I can go here, and I can say for a given period, in this case June 1st to June 30th, I want to set my Canadian dollars at a specific rate and or set my euros at a specific rate. Again, this is coming from those currencies we set up. So for purposes here, I actually set everything up individually. I can change day by day and enter the information day by day. I can also have the ability of importing and exporting currency exchanges from one SAP Business One database to another. So in the examples you see here, we have all our June. So we're going to be using these exchange rates throughout the system. So let's go in now and look at how this is set up. So we're going to go to a business partner, and we're going to call up a business partner here. And you can see that for the currency, the business partner currency is set for euros. You have the ability for a business partner to set him for one particular currency or all currencies. So in this case, ADA Technologies is set for euros. All right? And again, you can go here and look at the different balances. The VP currency, which is euro, you can see the balance. This customer has an aging of 44,000 euros. If I go to the system currency, I can see that the account balance is 61,000 US dollars. Same holds true for the local currency. If I drill in, I go here. Again, I can see here the balance, and this is the terminology we talked about. The LC is the local currency. So for this particular invoice, we have a local currency of 48.3625 USD. You can see the balance. You can see the system currency, again, which is also US dollars. And you can see the foreign currency, or the business partner, or all other currencies set in euro. If we drill into the document, we can see the same thing. We can look at this document. Again, you can see that the business partner is set for euro. So when this given invoice was done on this date, the exchange rate was 1.3197. Right? You can then see by switching here, you can go to the local currency or the system currency. Okay, SAP will do the conversion, and everything will be in US dollars. So let's go back to business partner currency, and you can see the information here. Right? Now, because this business partner was set to be euro, you can see that in my selection, I only get this information, as opposed to a business partner is set for all currencies where I can select the different currencies. So let's see that. Let's see how that works. I'm going to go into a new document, and I'm going to go here and put in ADA. Okay, you can see here that the business partner currency, the only selection I have is euro. I could, again, change to my local or system currencies. Okay, and again, those are set to US dollars, so nothing comes up as far as the information. But again, I can see that here. Now let's look at another customer. Let's call up Earthshaker. Now, Earthshaker, as you saw here, is I have them set for all currencies. And again, in my demo, I'm dealing with US, Euro, and Canadian currencies. So now what I can do is when I do the BP currency, I have the selection of the BP currencies. So in this case, I can select, since he's set for all, I can do this. His business partner currencies can be US dollars, Canadian, with the corresponding exchange rate that is coming off the table, or I can change, as well as euros. So you see the difference. If we go back to ADA, because he's set to only be euro, I don't have that selection in the business partner. I can only deal with euros. If I go back to the other Earthshaker, you can see here under the business partner currencies, I can select the currencies I want. Now, within all the documents, and when I talk about documents, I'm talking about payables, receivables, journal entries, all the marketing documents in SAP Business One. I could enter whatever rates I want, and it will do the conversion for me. So let's look at Earthshaker. So we're going to go here, and we're going to put an item. Okay. And you can see the unit price. You can see you got the $250, which is the US, and it's doing the conversion into euro. If I wanted to, I can go here and I can type in 250 EUR and do it that way. I can also go in here and say put in 250 CAN for Canada, and again, it will do the corresponding. Because the document is set for euro, down here you're going to get in euro. Even though I'm putting a Canadian exchange in here, the document totals are going to be in euro because that's what I've selected here. If I decide to switch this to Canadian, then what happens is the document is going to be in Canadian dollars. But the same holds true. I can enter US 250, all right, and then I would get the US and the Canadian. So it allows you to do that. In the case of ADA, the same holds true. Okay, but again, I can only make my exchange rate differences on the euro. I can still go and do the same thing. I can enter 250 Canadian dollars, and it will do the corresponding change. I can also put in 250 euro, and so on. So the system allows you to do that. It allows you the flexibility of entering different exchange rates within the system. Right? The difference being is that you determine here the setup. So for in this example, we had said ADA. If we look again here, his currency is euros. So we can only really enter euros. We can't enter the Canadian dollars. In the case of Earthshaker, we set him to be all currencies. All right. So then what's happening is we're allowed to select our given currencies that we defined in the currency table. So this holds true throughout the system. Also now what happens is if we look at this, let's go ahead and put this one in here. Let's go to euro, and let's pick a different rate, 1.4. And I can change that, and I can see my corresponding difference. Now, when I post this, if I look at my journal preview, it's going to post into an account, so we're going to have it set up automatically. It's still going to track it within the different currencies, in this case the euros and so on. So what we're doing is we're storing the information. Now, one of the processes that we do in SAP, since we stored that in euros and or Canadian or foreign currency, and our currencies can change as far as the rates at the end of the month, SAP allows me to do an exchange rate difference at the end of the month. This is because the document is there and it's still open. So this allows me to post to an unrealized gain-loss account. This is not required, but it's recommended that we do at the end of the month. What it's going to do, it's going to create a journal entry, assuming that, in this case, I have an invoice that's on the aging, assuming that invoice was paid at the end of the month. If I pay the invoice at the end of the month, based on the exchange rate, I either made or lost money. But because I haven't paid it yet, I want to reflect what would happen if the invoice was paid. So I want to affect my unrealized gain-loss. And again, this is done through the exchange rate difference account. If we come here and we look, let's open this. And this holds true for business partners and or general ledger. So we're going to go and we're going to actually say, let's make this at the end of May. And again, we're going to do it for all our currencies because we're dealing with both Canadian and Euro. I could do it one currency at a time, but I'm just going to go ahead and do everything here. I'm going to go here and change my gain account to my unrealized gain account. And I have an unrealized loss account. Let's just change these. So you can see here I have this, and again, the reason why I'm putting in the 3 accounts is because I have it, and these can be separate, again, determining on your general ledger, because I have it for the AR, so my customer business partners, my vendor business partners, and any general ledger, journal entries that were done. I can execute this, and I can see what's going to happen. It's going to tell me that this is going to be the net effect. You'll see the bank accounts that are being affected, as well as the business partners. And again, we saw ADA is foreign. We can also create a reversal, which I recommend. So here we're going to reverse on, say, 0601. The reason why I'm doing this is because I just want this reflected on my financials, on my trial balance. So I'm estimating my gain loss if I was to sell or do it today. So that's why I'm using the unrealized. I'm going to post that on the last day of the month, so it will appear on my financial statement. And then I'm going to reverse it the first day of the following month. And then I would do that next month and so on and so on. You can also save if you want. You can go here and let's say we can approve all of them or reject all of them. In this case, I'm just going to select a couple here. I can also save the report because I'm not ready to do this right now. I just want to get everything set up. Okay. So now when I come back into the report, and I go to my previous report, I'm just back to where I started from. So I have the ability of setting it up. I can enter references information in the system, okay, maybe month-end information, or let's just say this is for May 2012. So I'm going to go ahead and I'm going to add this. All right. So now I've added it. Let's cancel. Let's go back to my business partner. And you can see here that we created a transaction. Again, we can go here and we can see the information that we put in for May. We can see the effect on the account. So what we're doing is we're going to affect this business partner. We're going to credit him, and we're going to debit for the for the gain-loss account. We have a reversal set up for 6/1. So what I've done is I've actually made a transaction to the business partner. This is now part of the business partner aging. It will stay on the report for May 31st, and it will reverse at the end of the, on June 1st, the following day. So again, that's something you can do for your financials to reflect unrealized gain loss. The other thing you want to do is when you're dealing with your local currency being different from your system currency, is you want to do conversion currencies. I also recommend that you run this even though that your local and system are the same. So in the case of my example of Earthshaker, my system currency and local currency are U.S. dollars. I still run this report because what this report will do is will take care of any type of rounding issues in the system. SAP dealing with currencies and exchange rates out to 4 or 5 decimal places. There are times and there are issues when we could be off by a penny or two. So what I recommend is doing this program at the end of the month. Holds true the same way. We can select a range of business partners and a range of GL accounts. I'm going to select everything. I'm going to affect my unrealized gain loss accounts. I'm going to put a date at the end of the month, and I'm going to execute this. This will do the same thing. Again, the difference being is that it's going to take out the differences between the local currency and the system currency. Now again, the local currency and system currency in this demonstration are the same, but the system does still create rounding issues. So I recommend, even though you have your local and system the same, you should run this report. This is required for when you have a location. So for example, if Earthshaker had a location in Canada and was actually working in Canada, and that location had local currency Canadian dollars, system currency US dollars, this report will have to be run. You would obviously get bigger differences on the report. But you should still run this report on a monthly basis to take care of situations like this. And it works the same way. You can create the auto reversal to reverse the day out. You can save, come back later, or you can select and just add it. And it'll do the same thing. It'll create the transactions, journal entries for business partners and or general ledger, and set the system. Okay, so that was the actual dealing with the unrealized gain losses. That is for just entering the data. When we actually pay the bill, then is now we're going to make the effect. Because now when we actually pay the bill, we are going to actually post the difference to the realized gain loss account, because we're either going to make money or lose money. So let's go into that. Let's go into banking, and let's go and do an incoming payment. Okay, and let's select our person here. And again, you can see what's coming over. This exchange rate's coming over because of today's date. Right? I have the ability of changing this if I want, right? But I'm just going to use today's date. I'm going to select the document. So let's actually look at this document first. Let's look at document 100. Okay? You can see that this is an AR invoice that was posted back in 2007. At the time this invoice was created, we had a different exchange rate. Our exchange rate was 1.3. And now our exchange rate is 1.3866. So we have a difference in exchange rates. What's going to happen, SAP needs to pay this because it's a euro document and the money's coming in euros. And if the customer is paying correctly, we need to zero this out. So we need to affect this to pay it in full. Obviously, there's going to be a difference between the U.S. side of what's going to go into the bank. So let's do that real quick. Let's just select this, total payment in full. Let's go to our payment means. Okay, and again, we can decide here if the customer happened to pay you in U.S. dollars, you can enter the U.S. dollar equivalent. But for purpose of this, we're going to enter the amount of the euro. We're going to right-click. We're going to copy the balance due. So we're going to pay this in full. And again, you see your different amounts down here. Okay, you see the foreign currency amount, which is the euro. You see the LC, the local currency. So let's look at what's going to happen. Let's right-click, and let's look at the journal entry preview before we post to make sure everything's okay. So now we can see what's going to happen. We can see here that, again, the foreign currency or the business partner currency is euro. Okay, since we're paying this in euro, we're affecting to the clearing account the entire euro amount because we want to clear this out so it's not on the business partner's aging. He's paying it in his currency. And this is going to be the difference. Again, you can see for the customer, we can see the difference here. Because of exchange rate differences, we're taking the exchange rate of the document, which is here, and the exchange rate of today, which is going into the bank. So we actually made a gain. So we have the information here as our gain. And again, you can see all the different currencies. You have the ability of displaying foreign currency and the local currency as well as the system currency. If you deselect this, you can just look at those two. Again, this holds true for all journal entries. If I create a journal entry, I have the same capability as creating an AR invoice. So what's going to happen now at that point when we add, so now we've added the document. Let's go back and look. We can see here that the document is paid. It's been paid in full. We've applied all the euros, so there's no balance due. And again, we can look at the transaction. That was the exchange rate we used on the document. I don't have access now because this incoming payment is posted, so I can't make any changes here. And again, if I look at the transaction effect, you can see here. Okay? You can see the gain we made based on this information. So that's how the system works with currencies. What happens is when you actually enter and pay, and the same holds true on the outgoing payments as well as all the vendor documentation. So again, to recap, what we discussed was in SAP, when we set up our system, we determine, again, you notice that once this is set up and once transactions are in the system, we cannot change this. So in this case, OEC Computers is a U.S. corporation. We have our system currency set for U.S. dollars. We have our local currency set for U.S. dollars. Again, if we set up the database or the location in Canada, my system currency would still be U.S. dollars because I'm a U.S. corporation. My local currency would be the Canadian dollars. So we set this up here. We can create and set up any currency we want. So for example, here we just create the codes. And you can see here we have the U.S. dollars, the international codes, the international descriptions, how you want to round the amounts. Again, all the corresponding information you will need. You can create everything in here. What's ever created in the currency is then set up for the currency exchange rates. So you see here we have our rates, okay? So if we were to go into, say, let's say July, I probably have everything set up. Let's go out some time here. So you can see that I don't have it set up here. If for any reason something is not set up at a given time, when you go to enter the document, like for example, when I was entering the incoming payment, it would prompt you to enter the rates. But again, what most of my clients do and what I recommend doing, if you don't want to do it on a daily basis, I would set the rate for a range. I would go here and I would give myself a range. So in that case, I would say July 1st, July 31st, and go ahead and set my rates here. Then you can come back and you can change any rates you want. As we discussed, you can export and import from one database to another. So if you're dealing with, in this case, I have a database here for the U.S. corporation. I have a database for the Canadian corporation. And I'm entering the unique rates day to day. I can enter them all in one company, export them out, go into the other company, and import them back in automatically. Right? As far as the end of the month, there's a couple things that we do in end of month. You can see we do our exchange rate difference. Okay. What this is going to do, this is going to determine, based on the example I gave you before, it's going to determine at this given time, so in this case we're going to say execution date 05/31. At that point, it's going to look at the business partners, SAP Business Partners. We talk about vendors and customers. So it's going to look at the aging. It's going to compare the exchange rates from all those documents, from all those currencies, also in general ledger. Anything you entered as a journal entry directly to a GL account at a corresponding transaction, it's going to compare that to the exchange rate of the execution date, in this case 5/31. It's going to go ahead and it's going to calculate the difference. Right? It's just like we did on the incoming payment, except we're not really going to post. It's not a realized gain loss because we haven't been paid or we haven't paid the bill. We just want to see that on our financials, all right, to see where we are. So we run this program, and when we execute it, as you saw before, it gives you all the information, okay? We would set a reversal for the first day of the following month. In this case, we're going to put June 1st. We can click here to select them all, approve all. All right. As you saw before, we can approve all. We can save this. We can cancel out. We come back in later. This one here. And we can just go to previous report, and we're back to where we were. Right? And then we would go through, we would make our changes, and we would go select. We would add, as you saw before, what that's going to do. That's going to create a transaction within the business partner and the general ledger. And you saw that from our business partner. Okay. You can see here we created a transaction with a reversal of this date. So we're adding this information here for financial reasons. We're going to post it on the 1st. We're going to reverse it on the first day of the following month. And then we'll run this process on a monthly basis. We also talked about the currency conversion. This works the same way as the exchange rate. The only difference is this actually takes the difference between when the local currency is different from the system currency. I also recommend running this because of rounding issues, which could happen in SAP, which you see here. Okay, we have a penny and 2 pennies there on rounding. That could happen due to the exchange rates we're using and the amount of decimal places we're going out. But it is required when you're dealing with the 2 different currencies. I recommend doing both. The exchange rate, the first one we did, the difference does not have to be run, only if you want to affect your general ledger. Right? And then when we actually go to pay something, so we saw here in banking, now that we're actually creating the transaction, or making, in this case, we made a payment of this, and the exchange rates are different, by default, SAP is going to take care of that, and it's going to go ahead and make the corresponding posting corrections. In this case, it paid the invoice in euros, so it did that, and it made the corresponding gain loss to the actual gain loss account. All right. That concludes our session on SAP Business One's foreign currency, I call it exchange rate differences. Do we have any questions? Okay, no questions. Again, this is part of our SAP Business One training series. We have these every 2 weeks. This will be posted on our website probably in a couple days. So if you want, you can go to our website, www.mitchellgroup.net, and you can go in and you can view this and watch it at any time. So once again, if there's no more questions, this concludes today's training, and I thank you.